You are now trading with RT Money. Welcome back. I'm going to update you on CAD Swiss. CAD Swiss. I told you this was one of the ones that I had favored going into this week because it showed that it might set up for a very nice opportunity. All right. Let me take you back to that YouTube video. Let's go to the videotape.
This is a scenario where up until Wednesday, I'm looking for price to maybe fill this obvious imbalance here, rebalance that going into supply, and then come Wednesday, Thursday, when the news pops out, risk off, and the flight to safe haven starts, and then we come on down. What target? What would be my target for this? Why did my voice get so high all of a sudden? Let me see. Let me see. Down here. Ooh, look at this. Down here is a zone of demand.
All right. Let's just hurry this up. Let's just get a target, shall we?
The demand zone is here. Zone of this. I got the 80s. Looking at 80s, the 80 ending. I got that from ICT a long time ago.
All right. That's good enough. We got a target down here, right? And we've completed one half of that move according to that analysis I gave. All right. Now, we've rejected from the demand zone all the way up about 70, 75 pips to the supply. All right. What am I expecting? I'm not expecting a whole lot. All right. Because I don't want to be disappointed. But what I want to point out to you is if you remember that video analysis, I talked about how price failed to make a new high. All right. And we are bearish coming into breaking this structure point here. And this was a bullish run we were on, right? We were still on this bullish run. Okay, let me be the higher time frames. If we look on the higher time frames, as we go to the daily, you can see this is bullish structure. All right. Yeah, we are pulling back, but this is really a higher time frame pullback or a retracement. But the thing is that we broke structure here. All right. Up until that point, we could have said, hey, price could turn back around and we can resume the bullish momentum. But when you start breaking structure, it's like, oh, wait a minute now. So what I want you to see is this. I'm going to do this real quick. All right. Put a box from the low where that structure point is to the high up here. Slide it on over. All right. And you know that price is going to come back into this area because this is the range of supply. This is what that is. And you know that price is going to come back into here and quite possibly turn around. Now, it could come, like I had mentioned in the video. Okay. There was a fair value gap here, and that price would want to trade back into that and take it all at some point. It's going to fill it all the way up to here at some point. All right. What I was expecting was price to come back. See this line here, line there. That is the top, bottom, and middle of this trading range. All right. This is the trading range here. We've already come past the 50% mark. All right. Can I see a scenario where price comes all the way up here? I was looking for price to come here like it did. All right. I was looking for price to come there for Tuesday and Wednesday and drop from there because I said, well, 50%, it went over a little bit over 50%. Doesn't have to go to 705 or 786 as far as the fib levels are concerned. It doesn't have to retrace 80%. It could do 55% and then start its trip down. But I'm going to tell you something. Looking at this structure and looking at the rejection from this demand zone, I'm thinking that I mentioned it in the other video. If you remember, I mentioned it a little earlier, right around here. No, actually, right around here. I mentioned that there was no buy side liquidity sweep yet. I call it a swipe, right? I said there was no swipe. Then I corrected myself. I said there was no sweep. We have buy side liquidity up here. I'm thinking that we're going to go for that buy side liquidity. We're going to fill in this fair value gap. I'm thinking there's the potential that price could make a 2-day trip up here just in time for Wednesday and Thursday news, so that the environment can change from risk on to risk off and start coming down. So I'm thinking that's a possibility here. Now, this is how I want you to play this. This is how I want you. Listen, I'm not giving you financial advice, but I want to help. All right, we'll go to the 4-hour. Because you know how I do, man. Come on now. All right, we'll go to the 4-hour and we look at this zone up here. What am I looking for here? I'm looking for this. Let's go to the 15. We're going to look for a certain kind of price action. You see this line here? This is going to be the line that will tell us that price is getting ready to shift from bullish momentum to bearish momentum. All right, so a change of character line. Okay, and if price breaks that line, if we see this, oh come on, I don't believe I just did that. All right, if we see price come down here and pull back up, it doesn't have to close below that line. It just has to wick down. It doesn't even have to close, and then pounce back up and respects that high. Then this would be a very aggressive trade to take. I would only take a trade that breaks actual structure, and a break of this line here, a break of this low, a break of this, the failure of this demand zone here would signal to me that price is getting ready to turn down, and I'll wait for the pullback and then take this high probability trade to the downside. You understand? What am I looking for? A break of market structure, not the early warning sign, which is a chalk or a change of character. I'm looking for a shown up high, higher high, a break below that pullback low, and then down. I need this as structure, and this line here, this would right here. You see how it sweeps the liquidity to the left? All right, I need to see this fail. I need to see this fail, just like so. I need to see this fail with a line, with a price closing below it, and then I'll catch the pullback for the up. If this is the highest point, if it's not, and price continues higher, I'm telling you how to do this. This is how I do it anyway. If price goes higher, then that line, this line, moves here, where price pulled back and then goes up. This is the line I need to see a change of character. You understand? We've already taken liquidity from here. We've already swept that liquidity. All right, this one came back to test this zone here. If we take out the high, then you know we're going up. We're going way up. All right. But if you see the break of market structure, you see, oh, this is liquidity points down here. I'm looking for price to, let me make sure you're not confused. All right. That I don't confuse you. I need this. I need boom, boom. I need this high here. Whatever's cooking over here, I don't need it to break that high. I need it to break this low. All right. I need that low to break. Move my chalk line back down. All right. So the price breaks the chalk. Oh, I had it right here. Yeah. All right. Because this is the low line. This is the lowest line before the high was made. All right. This is the in relation to this one. This low created that high. If we break that line, there's a change of character. And if we break through this zone of demand here. If we violate that zone of demand, then this is confirming that price is going to go down. All right. A change of character would only tell me that we can target like an inside and like an inside low, an internal low. All right. A break of character, a break of character, a break of structure actually tells me I could target this low as opposed to this low. I want to be able to take that chance and look for a longer trade. Why is this still here? Okay, I hope you understand that. Now, the contingency plan is the contingency plan. Once we see our setup, we take that short. If that short doesn't set up, man, if that short doesn't set up and we break that high, shorts are invalidated until we get up here. Because I believe once we take out these highs, take out these relative equal highs up here, I believe that we're going to go up. We're going to fill in the rest of the gap, and we're going to see our short from up here. All right, and this would be perfect because if you put your fib on that for the trading range, you can see that up here is where 705 and 786 are optimal places to take a trade. This is the premium prices. This is the discount prices. This is the 50% mark is the equilibrium. Once we break equilibrium, we're hoping that it gets up here for a discount price to take the short. Everybody with me? Good. Because I think we got it. All right. We had to break a structure to the downside on the higher time frames. That means price is demonstrating that it will go down. All right. Until it breaks this high, we are bearish. Got it? Good. That's structure, folks. That's not just some old smart money mess. That is structure. Structure. Keep it simple. I will see you in the next video. Look out for the scenario here. And if this, then that. If it breaks that high, we're looking up here for a good short come Thursday or Wednesday or Thursday. What I'm hoping to set up is here because that would be awesome. All right. I will see you in the next video. Thanks.